We're projecting our fourth wave to come down to this $330 range and finally put in new highs at $370. Now don't forget that once this 5-wave move is in, again, we have a 1 on a larger degree and we'd be expecting a 2 to retrace to the 50 of that entire move. Is the stock market crashing? How deep is the S&P going to retrace? Maybe Tesla's S&P inclusion in the S&P, will it happen? And if so, will it save it? Is this the end of the tech bubble that we've seen recently? In today's video, we're going to be answering all of these questions by taking a detailed look at SPY, doing some technical analysis on it, and making predictions of where the price is going to go next and what will come after that. Once we have these technical analysis predictions, we'll be answering all of those questions. Now, just a quick reminder before we get started into the content. If you do like this video, please smash the like button and click subscribe for future similar content. I really appreciate the support. So let's go ahead and start looking at the SPY chart here. I have it open on TradingView, which is my favorite platform for charting, but you can use whatever you prefer. If you want to get started with TradingView, it's completely free to use. One of my favorite technical analysis tools is Elliott wave theory. In my opinion, it's the absolute best tool for predicting long-term trends in the market and trying to figure out where we're going to go next. So I'm going to go ahead and start with an Elliott wave count here. I'm just going to make it a rough one and see if we can validate the count, or maybe we'll have to move some of the pivots around to make sure it fits properly. Now, if you've never heard of Elliott wave theory before, just as a quick summary, it basically states that the market trends upwards in moves of 5 waves and then corrects in 3s. So let's just dive into the chart and see what that would look like. I'm going to start counting it from the bottom here. You could of course zoom out more than this and try to get a count that includes all of the price history. However, once you have a major pivot in, it's often enough to just start that pivot and work from there. So that's what I'm going to do today. I'll click on the very bottom here as start of my Elliott wave count, and then label this as the 1, this as the 2, this as the 3, this as the 4, this as the 5. Basically, the 1, the 3, and the 5 are going to be the tops of our moves upwards that you can see, and then the 2 and the 4 are the pullbacks of those moves. So you can see I've labeled the 3 peaks that I see very clearly in this first move up right here that are all followed by retracements right afterwards. This one right here, this one right here, and this one all the way back down to here. So now that I have this first move in the market mapped out, I want to go ahead and verify it a bit with some Fibonacci retracements, Fibonacci extensions, and maybe some channels as well to make sure that it's actually valid and follows all the rules of Elliott wave theory. So back on the chart here, the first thing I'm going to do is pull a Fibonacci retracement from our bottom here, click there to the top of our move up here. Now it might be right here, or it might be this pivot over here. I'm going to choose this left one right here because I think the right one is actually part of an ABC structure that makes up this 2, which would be an expanded flat. Basically, our A wave is the first wave move down here, then our B wave ends up retracing that fully and going above where I labeled as the top of the 1, and then our C puts in the final push. So let's go ahead and pull that fib retracement from the bottom here to this peak right here, and look where we retrace to. So our highest probability spot for a 2 wave is between the 50 and the 65 right here, kind of in this little box. However, we know that about 15% of the time we still only retrace to about this 38. And keep in mind, we had one of the largest crashes in history right before this. We're trying to bounce off of those March lows, so a shallow retracement doesn't surprise me at all in this situation. This looks totally fine and we'll move on. The next thing I'm going to do is use this trend-based fib extension tool just to measure the length of the 3 wave here relative to the length of the 1. So I'll click at the bottom of the 1 here and at the top of the 1, and then I'll click at the bottom of the 2. This 100% line would be where the 1 and the 3 would be exactly equal, and it's actually a rule in Elliott wave theory that the 3 cannot be the shortest wave. So if it's shorter than both the 1 and the 5, it's not a valid count. However, here we can see that the 3 comes past this pink line, so it's longer than the 1. We typically would expect a 3 to come up into this range, this 1.618 to 1.75, but this is not impossible to see. Now, after looking at these measurements, you could definitely start to pull this 3 up and expect it to be in this range a little bit more. So where we have the 5 labeled, you might try to label that the 3. If you start pulling that forward a little bit, the 4 would have to be down here, which looks fine, and then the 5 would have to be all the way up here or even pushing higher, because there's really no other significant pullbacks after this 4 low right here. And after a 5-wave structure, we absolutely need to have a larger pullback. So the problem I have with labeling it like this is that our 1 wave here is only about a week long in length, and then our 5 wave would be multiple months from June 12th all the way to the beginning of September, so almost 3 months in length, compared to this 1 week long one wave. This is so far off in time that I'm going to go backwards here and put my count back to where I had it originally here. There's no direct rule stating how these waves should compare to each other, but when the symmetry is that far off, you're usually talking about waves on different degrees, which you'll see soon. Okay, so we know our 3 isn't likely to fall here, but it appears to be the only spot that we can actually place it. It has to be above this pink line, and it has to have a retracement following it, and this is the best retracement I see. Not only that, but we know that a 4 wave is a 3 wave move down, as we discussed at the beginning. This 4 wave pretty much has a textbook look to it. This first move down would be the A wave, this retracement is our B wave, and then finally the move down here is the C wave. So I really like the 3 here. I'm going to go ahead and leave that. Again, it's not probable, but it's valid and we can use it. Next up, just like we pulled a fib from the bottom of the 1 to get the 2 retracement, we'll do the same thing for a 4. However, with a 4, that 38 to 50 zone between this blue line and this red line is the most common. And you can see our 4 comes very close to this 38, just about a single dollar off from getting right to that correct spot. So this helps me validate the 4 wave in this case. And finally, once our 1, 2, 3, 4 is in, we'd be using a parallel channel to try and find out where the 5th wave lands. This parallel channel is drawn from the bottom of the 2 wave here to the bottom of the 4 wave that we've labeled and connected to the top of the 3rd wave here. Now, about half the time the 5th wave will come perfectly to the top of this channel and then retrace. However, we know that if the volume is low going up and decreasing as the top of the 5th is coming in, it signals that there's a bit of buyer exhaustion going on. So when this happens, we'd expect the 5th wave to actually fall short of that parallel channel. Let's go ahead and check the volume. Okay, so starting from right here, the bottom of our 4 wave, you can see that volume is definitely decreasing and very low all throughout our 5th wave here. And this is the very top of our 5th wave. So volume agrees with this 5th wave coming just short of that channel line, and it indeed did, before a huge pullback right afterwards. So in Elliott wave theory, there are basically waves within waves. So once we have a 5-wave structure, this actually counts as a 1 wave on a larger degree, and we'd be looking again for that 2-wave pullback. So we don't have any of the other data points in right now, but I'll show you what I mean. It would start from the bottom here, and this entire 5-wave move would be the 1 wave, the first pullback is the 2 wave, and then we're looking for the 3, 4, 5 to fill in. Again, I'm just putting these in space right now because we don't know, and I'm going to turn the degree higher and change the color on this so that you can actually see it a little bit better here. So just as we measured the retracement of this 1 to this 2 with a fib retracement, I'm going to do the exact same thing with this 1 to this 2. And once again, our 2 retracement is extremely shallow. We don't even make it to the 38. And let's try putting on the 23.6 here. And this fib actually does catch it very nicely, which is always a good thing to see. Even though this is extremely shallow and we're talking very low percentage chance of this happening, it's our only real pullback on a larger degree here. So we have to go with this going forwards. Again, this is not likely, but it's still valid and we can still use it. Okay, so let's try and get our Elliott wave count on the rest of this here. I'm going to just click from here again. And this is our first peak as our 1, our first retracement as our 2, our next peak in here, our next retracement, and our next peak. I'm going to put the degree down on this again so it matches that pink one that we originally have, as I'm looking at this and I think that's about the same degree here. In Elliott wave theory, the only time the 4 wave can overlap the 1 wave is when we have a leading diagonal. And there are 2 types. You can either have a contracting leading diagonal, where the lines I'm about to show you are coming towards each other, or the lines are going away from each other as an expanding leading diagonal. You draw these lines by connecting the 1 to the 3 and then the 2 to the 4. And you can see these are definitely coming towards each other, these pink lines right here. What that means is to validate this move right here that we've labeled, the 1 wave has to be the longest, the 3 wave has to be the second longest, and the 5 wave has to be the third longest. We'll use our trend-based fib extension tool in order to validate this. I'll click at the bottom of the 1, to the top of the 1, to the bottom of the 2, and you can see that the 3 comes just short of hitting that pink line, which means it is indeed shorter than the 1 wave. So check number 1, and check number 2, the 3 has to be longer than the 5. It very clearly is. So on a very small degree here, we have another 5-wave structure. We can label this as a 1 wave, first pullback again as a 2 wave, and now if we try to label this as our 3rd wave, it's not going to really make sense in the larger picture here. We have a lot more room to go. This would have to be our 4th, and we'd have to have a 5th either in here somewhere or all the way up here, so the symmetry doesn't really add up. So I'm going to go ahead and go forward and look for the next pullback after that. And I like this one in here. This little high, it's going to be a very shallow 4, but this move is so bullish upwards, we don't really have a choice otherwise. And finally, the 5th at the top here. Again, I'm going to change the degree, change the color, and just to clean up our chart, we already know the one wave is valid. I'm going to go ahead and hide some of this stuff. And now we just keep repeating the process that we've been doing. We're going to validate this 5-wave structure and see if it makes sense and see if we can get a larger degree count on this right afterwards. I'm going to do this one a little bit quicker and click through it quickly because I've already showed you exactly what to look for when validating these structures a couple times now. So first thing first, this fib pull from 1 to 2, down past the 38, it looks good. Fib pull from the 2 to the 4, really shallow as we were saying, but again, we don't really have another choice in here. Fib extension of the 1 compared to the 3, and the 3 is longer than our 1, so this is going to be valid. And then last thing is the parallel channel from the 2 to the 4. Pull it up to the top of the 3 here, and you can actually see that this parallel channel gets passed through right away. It's important to note that technical analysis is not always correct. It's just a game of probabilities. So all of the guidelines aren't always going to be perfect, and sometimes you'll have to look for other things that are in the market, other geometries that might be framing the move. So as this was going upwards and we broke out of that original parallel channel I had drawn for our Elliott wave structure, I was looking for another parallel channel that might be good. One thing that really caught my eye was pulling a channel from this low down here, catching these bottoms in here somewhere. So pulling this over like that, and then clicking it at the top of this high that we had right here. So ignoring the fact that, of course, I'm showing you this in hindsight and we had a perfect bounce right off the top here, look how well this frames the market. We of course started it here, and we caught this high up here, and unintentionally caught this one, and every time we pulled back from the top there, this yellow dotted median line caught our moves very well. So it was support in here and just shy of support in here before we went up. When we broke through it, we finally came back down to the bottom of the channel, of course where we've drawn it, pushed off the bottom and hovered around this dotted yellow line all the way through here until we came below again, started to come back up, found resistance at the median line again, and pushed to the top before finally we had this major move downwards. So now our recent move has actually broken through the channel, and the final sign of confirmation here is the fact that we came up right to the bottom of this parallel line, and now we're starting to push down again with this red candle to close the day on Friday. It's a very common pattern to break through a channel and come back and test it before another low is put in. So in other words, this parallel channel is predicting that we're going to go lower. But anyways, we just did a ton of Elliott wave work. Why don't we see if that also agrees that we're going to go lower? So we had this yellow 1, 2 that we put on the chart originally that we're trying to fill out. I'm now seeing that this yellow count that I've put on this part right here is actually a degree lower than this one. In other words, this yellow 5-wave move is going to be making up the yellow third here. So to avoid confusion, I'm going to change color on this one. Let's go to a blue, and I'm going to go up in degree as well. So now, as I was saying, the third wave in blue here is this full 5-wave structure that we put in. So again, next up, we'd be looking to figure out where this 4 is actually going to land. And then finally, the 5th wave would be the higher push. So before with our 4 waves, both this one right here and this one right here that we were putting in, we were pulling Fibonacci retracements from the 2 to the top of the 3 and trying to find good retracement targets for the 4th. Let's just go ahead and do the same here. I'll pull from the bottom of the 2 to the top of our 3rd, and as I was saying, the 38 to the 50 is the most common zone for a 4th wave to fall. You can actually see that our first move down come to the 38 exactly on. So in one sense, you could have some sort of confidence that the move down is actually done right here. This is a perfect target, let alone another guideline of Elliott wave theory says that we'll retrace at the 4th wave of the previous 3rd. In other words, this yellow 4, this makes up the 3 right here, the bottom of it is used as support. And you can see that's actually perfectly where we came. So both of these Elliott wave guidelines are actually pretty satisfied here. However, there's one major problem I see with this, and that's that Elliott wave corrections are never just one impulsive move downwards. It always needs to be that 3-wave ABC structure that I was talking about, and I think trying to fake this as an ABC is a little bit too wishful. Instead, I think it's going to more look something like this, where this is our A, our B is coming in at this trend line, or even a little bit higher, and then our C wave has one final push down. Changing the degree and color, that would be much more preferable. So if it's not going to be the 38 and we're going to push lower, this 50 would be a perfect target for our fourth wave. I'm going to delete this Fibonacci retracement and get rid of the channel right now, just hide it. So the very final way we can validate where this might go to is to measure the depth of the A and project a 1-to-1 or 1-to-2.72 ratio of the A to the C. These are both very common numbers. We would get our trend-based Fibonacci extension tool, look at the top of the A here, bottom of the A, and then top of the B here, and let's say it just falls in right where we are now, or even a little bit higher in here. We'd be looking for the 4 to follow this 1, this pink line right here, or this 1.272 down here. So now that we've drawn this on the chart, we've projected our B to come maybe a little bit higher. We're looking for these targets. Let's pull the fib again and see if we can get any sort of confluence or agreement in our indicators. And as you can see, both of these zones actually line up really well with fib values. However, that 50 that I was just talking about looks like a really good target. If we just draw a box to include that 1.0 of the A to the C, that pink line, and the 50 here, this is where I'd be targeting for our next move to come down to before we finally continue upwards. This would be a great spot for our 4 wave to land. So if you're still hanging in here, now we have a target for a 4th wave move. Let's go ahead and project out where we're going to go after that. So back to our chart, let's do the same thing we've been doing the whole time and just draw a parallel channel from the bottom of our 2 to the bottom of our 4. Of course, we don't know where this is going to land. Let's just say it's somewhere in here around this point in time and pull this sideways. And then we'll pull it to the top of the 3rd here. So now this is our new parallel channel. And actually, if you look at how it's impacted the market in the past, you can see this median line was perfect resistance in here, through here, support through here, support again in here, and we're coming down and hovering on it right now. So when you see geometry that's worked well in the past, it's a pretty good sign that it's going to work well again in the future. In other words, maybe we do come down perfectly to this channel that we've drawn, and then the 5th wave comes up to put in new highs afterwards, perhaps somewhere in this $370 range. The very last thing I like to use to predict out the 5th wave here is to pull another Fibonacci retracement from the 2 to the 4 as we just had, and look at this green negative 0.236 fib I have. This is basically the 236, but flipped onto the other side of the 0 here. So the distance from here to here is just put backwards to up here. This is another really good target to have. So we'd be looking for the confluence of this green line to meet this parallel channel, and somewhere in here looks like a really good target for our 5th wave. So now I'm going to delete a bunch of things on this chart and clean it up so we only have the important information. Let's get rid of that, hide this count in here, hide this ABC, and there you go. We have a pretty clean chart. We're projecting our 4th wave to come down to this $330 range and finally put in new highs at $370. Now don't forget that once this 5 wave move is in, again, we have a 1 on a larger degree and we'd be expecting a 2 to retrace to the 50 of that entire move. So if you've made it this far, then maybe all of your questions have already been answered and you know that the stock market's not going to crash. However, I want to specifically address the most common questions I've been asked recently. First off, how deep will the correction be? And as you saw, I don't think it's going to be much deeper. Maybe another 10 points down from our Friday lows. The second most common question is the stock market crashing? Is this the end of everything? And I'll say no, I don't think that's the right word. It's definitely not crashing and it's definitely not the end of everything. The stock market has pullbacks often and they're extremely healthy for uptrends. When things rise too quickly, they tend to fall very quickly afterwards. So these healthy pullbacks are actually really good for the market. And for us buyers, it's basically like buying at a discount. The third question revolves Tesla. Are they going to be included in the S&P? Are they going to help pull this market back upwards? To this one, I'll say maybe. I know a lot of people out there think they're not going to be added because of all the volatility around their stock. And just to clarify that, the S&P is market cap weighted. The total market cap of the S&P is somewhere around $30 trillion right now. The market cap of Tesla is somewhere around $500 billion. That means Tesla would only make up about 2 to 3% of the entire S&P. So to have Tesla drop the S&P price by 2% would essentially mean Tesla would have to go to 0. So my prediction is that Tesla is going to be added. And yes, they might help hold up the price a little bit by getting more people interested in buying, attracting more buyers. All I can say for sure is that we know Tesla is eligible, so why not put them in? Thank you all so much for watching. If you like this video, please do click the like button and hit the subscribe button for future similar content. It means a lot to me, it supports me a ton, and it really only takes you a couple of seconds.